Have you ever considered how secure your financial future is? It's a question that can keep you awake at night. In a world of economic unpredictability, it's crucial to take proactive steps towards protecting your financial future. One key aspect of this is preparing for inflation. You see, inflation is like a silent thief, gradually eroding the value of your hard-earned money. But don't fret. There are strategies you can employ to guard against this. Another vital component is diversifying your investments. Putting all your financial eggs in one basket is risky. By spreading your investments across various assets, you can balance potential gains and losses. Beyond that, we'll explore the world of side hustles, dropshipping, selling ebooks, and more. These are avenues you can tap into to increase your income and further solidify your financial standing. Stay tuned as we delve into these topics and share practical steps you can take to secure your financial future. First, let's tackle the question: what is inflation? Inflation, at its most basic, is the rate at which the general level of prices for goods and services is rising. Imagine you walk into your favorite coffee shop, and a cup of coffee costs $2. If the inflation rate is 2%, by next year that same cup of coffee will cost $2.04. Not a big change, but imagine this happening to every item you purchase. Over time, your money buys less and less. That's inflation. Now let's dive deeper. Inflation is not just about rising costs, it's also an indicator of the economy's health. When the economy is strong, demand for goods and services increases, causing prices to rise, which is normal inflation. However, too much inflation can be harmful, creating instability and uncertainty. On the flip side, deflation, or falling prices, can lead to an economic downturn. So how does inflation impact your personal savings and investments? Let's take a look. If you're saving money in a bank account that earns 1% interest, but inflation is 2%, you're actually losing purchasing power. Your money is growing at a rate slower than the increase in prices. What about investments? Well, inflation can erode the value of investments, particularly fixed income investments like bonds. If you buy a bond that pays 5% interest, but inflation rises to 6%, the real return on your investment is negative 1%. Let's illustrate this with an example. Imagine you're an apple seller. You buy 100 apples for $1 each, planning to sell them for $2 each. But due to inflation, the price of apples increases to $3 each before you can sell them. Now you're losing money on every apple you sell. Inflation can be a silent killer of your financial health, eroding the value of your money over time. It's like a financial game of musical chairs where the music is always playing and the chairs are your dollars, slowly disappearing. Now that you understand inflation, let's explore how to protect your finances from it. So, how can you protect your finances from inflation? You might be asking yourself this question right now, and the answer is simpler than you think. It all comes down to strategic investing. The key to shielding your wealth from the eroding effects of inflation is to park your money in assets that tend to increase in value over time. These assets act as a sort of financial umbrella, sheltering your hard-earned cash from the rain of rising prices. So, let's dive into some examples of these inflation-beating assets. First off, we have stocks. Companies continually strive to grow their profits, and as they do, their stock prices generally rise. Over long periods, the stock market has historically provided returns that outpace inflation. Next, we have real estate. Inflation often leads to higher housing prices, so owning property can be a good hedge. Plus, if you're renting out your property, you can typically increase rent over time to keep pace with inflation. Then we have commodities like gold and oil. They have intrinsic value and their prices often increase when inflation is high because they are priced globally. If the cost of living goes up, so does the price of these commodities. Bonds, particularly inflation-protected securities, can also be part of your strategy. These are unique because their value is adjusted with inflation, ensuring your investment keeps pace with the cost of living. Lastly, consider investing in foreign assets. If your country's currency is losing value due to inflation, assets in a country with lower inflation may increase in value when converted back into your home currency. Remember, it's not about putting all your eggs in one basket, but rather spreading your investments across different asset classes. This way, you can balance potential returns with risk, and ensure that no single inflation spike can wipe out your savings. Now that you know how to protect against inflation, let's discuss diversifying your investments. But what does it mean to diversify your investments? Quite simply, it's the strategy of spreading your investments across various assets to reduce risk. Think of it as not putting all your eggs in one basket. If one investment performs poorly, others may perform well, balancing out potential losses. Investment diversification is like a buffet. You wouldn't fill your plate with just one type of food, right? In the same way, you wouldn't want to fill your investment portfolio with only one type of asset. By spreading your investments across different asset classes such as stocks, bonds, real estate, and even commodities, you can create a balanced portfolio that can weather the ups and downs of the market. So, what are the benefits of diversification? Well, first off, it reduces risk. By spreading your investments across different assets, you're less likely to lose all your money if one investment performs poorly. Secondly, it can potentially increase your overall returns. Different assets perform well at different times, so by investing in a variety of assets, you can take advantage of these fluctuations. Let's look at some examples of how to diversify your investments. If you're into stocks, you might want to consider investing in a variety of sectors, such as technology, healthcare, and energy. You could also think about investing in different types of stocks, like growth stocks, value stocks, and dividend stocks. If real estate is more your thing, consider investing in different types of properties, like residential, commercial, and rental properties. You could also diversify geographically by investing in properties in different cities, states, or even countries. Another way to diversify is by investing in different financial instruments like mutual funds, exchange-traded funds or ETFs, and bonds. These can offer a mix of different asset classes in one package, making it easier to diversify. Diversification is a key strategy, but there's more to achieving financial security. Let's explore other ways to increase your income. As we continue, we'll delve into side hustles and other income-generating strategies to help you take control of your financial future. How can you increase your income to further secure your financial future? Let's dive into the vast ocean of side hustles. Picture this. You have a day job that pays the bills, but you're looking for ways to paddle your financial boat a bit faster. Side hustles might just be your answer. They're like the extra wind that propels your sailboat, helping you reach your financial destination quicker. Consider dropshipping, for instance. It's a retail method where you don't need to stock the products you sell. Instead, when you sell a product, you purchase the item from a third party and have it shipped directly to the customer. This way, you don't have to deal with the logistics of inventory or shipping. It's an excellent way to dip your toes into the world of e-commerce without a huge upfront investment. Or perhaps you're a wordsmith at heart. Selling ebooks could be your golden ticket. You don't have to be the next J.K. Rowling to make a mark. Write about what you know. And there's likely an audience out there waiting to devour your content. The beauty of ebooks is that you create them once and sell them over and over again, creating a passive income stream. Online marketing is another compelling avenue. Do you have a knack for creating engaging content or a keen eye for design? You can offer your skills as a service. Help businesses reach their target audience more effectively, and you'll find yourself with a steady stream of income. And let's not forget about streaming channels. If you have a unique talent or a captivating personality, platforms like YouTube or Twitch could turn into lucrative income sources. From gaming streams to makeup tutorials, the possibilities are limitless. Remember, the key to a successful side hustle is passion and persistence. It's not always smooth sailing, but with grit and determination, you can navigate the choppy waters and reach the shores of financial independence. With these strategies, you can take control of your financial future. You now have the knowledge to protect and grow your finances. Let's recap what we've learned today. We've understood the concept of inflation and how it can silently erode our purchasing power. We've explored strategies to protect ourselves from inflation, such as investing in assets with a good return on investment. We've talked about diversifying our investments to spread risk and maximize potential returns. And finally, we've discussed ways to increase our income through side hustles and other means like dropshipping, selling ebooks, online marketing, and running a streaming channel. But remember, knowledge without action is just information. So, start applying these concepts today. Keep learning, keep growing, and take control of your financial future. Remember, this is for educational purposes only and should not be taken as financial advice. For professional financial advice, consult a financial professional. Don't forget to comment, like, and subscribe to our channel for more insightful content. And be sure to follow us on Twitter at 4YaFreedom for the latest updates and discussions on the world of finance.